morning, everybody. It's Wednesday, December 6th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As is always the case, if you got any questions or comments, please feel free to drop those in the chat section, and we'll get to those during the show. You can also reach out to us at info@agyield.com. Real quickly, overnight markets here. We had December corn up 3.5 at 472. January beans were up 2 at 1307.5. And March Chicago wheat was up 9 3/4 at 641. Had a couple of sales announcements here this morning. 372,000 SRW to China for 23, and 136,000 soybeans to China also for 23. We're going to start right there. Another huge announcement this morning in the wheat complex, and I'll throw it over to Justin to visit on what we're seeing there.
Yeah, thanks, Dan. I think, just kind of building on what we've been talking about, we hit a price point where it's, for whatever reason, China's really, locked into soft red wheat. We're on a 7-day rally. I'm sure part of because they have been buying it, right? It's kind of self-fulfilling prophecy. But interesting yesterday too, just kind of how the spreads acted. We've been talking about spreads for a long time. Here's a chart of December versus March wheat. We're in deliveries. We triggered VSR again. We talked about this yesterday. We triggered VSR on the September delivery time frame. I think they tried to push it to see if they could trigger it again, kind of forcing it down in that time frame. It's been kind of narrowing, but here we are. We spiked to basically 8-month highs yesterday. Now again, you're in deliveries, but a lot of times that can kind of tell a story. If you got a big short, which we've been talking about, going right into actual commercial buying, through China, get some kind of a short squeeze here, and we talked about this yesterday after the close, but if you were to see another, big announcement like this, we could kind of come off the rails here. So it'll be interesting to see how stubborn the shorts wants to be, here when there's actual buying. It's one thing when you have a spec buying or short, short covering rallies. But when you actually break into commercial buying and they're taking physical supplies off the market, you gotta be a little concerned if you're short, 600 million bushels of wheat, which is more than we grow.
Sure. And Justin, I noticed there's about 114 Kansas City wheat that were canceled overnight too. Can you address that for us? Yeah,
same kind of thing. We talked about this yesterday too. Kansas City wheat, the premium of Kansas City over Chicago has deteriorated from, $1.80 a bushel premium and last May, June to, in the 30-cent range. Let's see right now. Yeah, right now it's even 28, 29 cents. So fairly priced there. You're starting to cancel some receipts. My guess is that's, another commercial wanting to take ownership back of some receipts. So just a lot of fundamental things that, would signal that we're, pretty value area here in wheat. And, maybe we've seen the lows for now. And we have enough demand at these levels. It's in a big short. I don't see a big case for going and making big new lows right now.
Sure. And I'll throw this to the crew, but, I think the initial reaction in the farming sector is going to be, if wheat got diabolical for some reason, and this is a continuation, good exports in corn and, wheat catching a bid. That's got to be somewhat supportive in the corn complex. Ben, you got thoughts on that?
Yeah, I think it's kind of goes back to a little bit of what we talked about yesterday, that when wheat gets this much over corn, there's not a true feed relationship, but it's certainly not going to hurt corn, especially as the short's been profitable there. You have to tick off some areas. Managed money is they're not one to cover on big breaks because they're right. They're more likely to cover once they tick through certain numbers and buy it when it's going back up. So I think it makes corn somewhat vulnerable to a little bit more covering, but that relationship we have to be careful with when wheat corn is not trading in a feed type scenario where you see wheat, at even money to corn or even unders like we saw in 2010 and 2011 when we had a really tight corn balance sheet and a really ample wheat balance sheet. And right now we're kind of on the opposite ends of that. Not super tight in wheat, but certainly heavy corn supplies. So it's not going to hurt corn, but it will probably not be to the expectations that a lot of people would like in the corn market, I think, on a short covering rally, because I think there's a lot of corn above the market that needs to be marketed. We just came out of a roll that cost, let's call it 18 to 25 cents for a grower to re-engage in the market. And we're on about a 20-cent pop in March off of that. So I think that we have to be cognizant of the fact that it's not going to hurt corn, but it probably won't help to the degree that a lot of people would like.
Yeah, my comment on that is, your best, in my opinion, your best shot is the same people that are short wheat are probably short corn, right? So a lot of times when you start taking, you get pain on your profit loss statement, right? You kind of get out of everything, so that's probably, the best, chance you have, in my opinion, is you do get, they want to cover 100,000 corn shorts going into a holiday thin market. You just look at, me looking at a chart, just saying like what areas, the 200 day is always a big one. That's in that 628 area, 528 area in March corn. Between 495 and 528, there could be some good chances there. Just look at where the moving averages are, where you might trigger these guys to have to cover some stuff, and what levels you might actually run back into farmer selling. And I think those are kind of the areas that I would be looking at.
Yeah, and I would add to that too, Justin, on those relationships, the intra-commodity relationships. Funds are obviously short wheat, short corn, like you're talking about. We did put up in the letter that they're also long beans. So there has been a pretty interesting, inverse relationship where, you see wheat strength, you see some soybean selling. So there might be some liquidation there on that spread. I know that the weather has turned a little bit, better for chances of rain in Brazil for the bean complex. We have record crush though. We have declining soybean oil stocks. So it is interesting that there is some domestic support still for beans, and we're seeing a pretty large sell-off here in the last couple of days in the face of wheat strength. That could be some fund liquidation as well. We'll have to wait for that Friday's COT report for confirmation of that.
Yeah, that's a good point. And those, some of these trend following funds like that works till it doesn't. And I think at some point you get a liquidation where they don't necessarily get back into that. If that inverse relationship, it's great if you're just a spec trader and that's just how they're trading. And you're right. It's obvious watching these markets every day that there's a group or several groups trading that kind of a thing. Same with meal oil. There's a couple. Wheat corn was a big one for a while. So you kind of go through these phases, and to your point, it can create opportunities in some commodities that are fundamentally good or bad, when they're unwinding these positions. So I agree.
Well, I think looking at the calendar too, December, an old trader adage is you don't make your year in December, but you can lose it, and you don't want to be that person. And if we were to get some carryover strength into corn, we're getting into the end of the year, and then we're 2 weeks over into the final WASDE numbers. And in my personal opinion, I think that we're going to see a larger corn yield. Doesn't mean that they can't jockey something with exports between now and then, or something that happens in South America, but that would represent a pretty sizable bounce off of our lows and getting into some areas that would be, I would think, heading into that January report, pretty appealing.
Yeah, and then you're really not that far from crop intentions, planting intentions, so it goes by fast, before you know it's going to be the next first notice day that we're talking about, in early February. So it's good to kind of have these orders and think ahead of time, because they get thin and choppy and things change quick.
Yeah, definitely. Justin and the rest of the crew.
I will add something here too. Yeah, to that point, right? We've seen record Brazilian exports in corn, right? Really since July, and that's seasonal. We see that, but not to this number. So right, they've been eating our lunch this whole time. But that seasonally falls off, end of Jan, Feb, March timeframe. So that coincided with some dry weather in South America. Like you said, maybe we get a bullish report. They're buying wheat. Some of these things can start feeding off of each other. something to keep an eye on for sure.
Yeah, and I was just going to allude to that. I mean, we do have obviously the USDA report here on Friday, and by most accounts, people aren't getting up in arms over a December report, rather looking forward to January. But the more and more you hear the chatter is that they can't wait to write down South America. I mean, is that something that we're anticipating even ahead of January? Do you think that they, given the, you could call it less than ideal, but we're going to also talk time frame. But will they? Can they make a big move here in December on South America?
I doubt it, and they shouldn't. It's early, and you can argue that some damage has been. We've played this game, and I think we've seen how that's played out in the U.S. multiple times, and South America. Not to say we couldn't end up losing 50 million tons of beans. That's possible, but just kind of hard to write it down off of November weather. I think that's more going to be a January report if they do something once they actually see what's happened. It's been raining. Not to get into semantics on if it's enough or right places or anything like that, but not that they can't change it here and there. But I wouldn't expect a major change on this report.
Yeah, well, that's good info because, like I said, the more and more the last couple of days as you're reading, and it's like I think folks that have been on that narrative, feel like they can't wait to see that write down, and it could potentially be that disappointment that they get in, in December if it's not what they want.
Well, a lot of the ones on that narrative are the ones that were on the U.S. narrative and had to switch over to something else, right, when it didn't work out. So be careful what narrative you're following, but it's gonna be interesting. I think that you start running the numbers. Argentina's getting some more rains. The problem we have, and I'd love to be as excited as anybody here. I think the best thing we have going for us is our domestic crush capacity that we've talked about. We're going to see record crush numbers month in and month out. We're hitting these numbers, and oil stocks still can't rebound. So we're using all the meal and all the oil. So I mean, domestically, it's very exciting. It's just the South America production numbers so hard to contend with. You have to have several problem areas in that continent to really move the needle. And usually if there's a bad area, there's a lot of really good ones. So last year we clipped Argentina, so that helped meal and oil demand because they're the largest exporter meal and oil products. But Brazil was great. This year maybe you have a Mato Grosso has a rough start, but Argentina's looking great. So it's just there's so many metric tons down there. It's just so hard to hurt the entire area.
Yeah, and I do want to put out too, because we don't really talk about oil share a whole lot on this show, on this podcast, but we're down to 38% for March oil share right now. And that's from, last year we touched 50% at one point for the lead month.
Tell us what that means real quick, Dustin, and just when you talk in terms of percentages.
It's oil's value to meal as a percentage of crush, right? Like it's oil's percentage of crush value. So 38.2% value, that's historically pretty average. 50% is very, very high. As we continue to dwindle on soybean oil stocks, it's just going to be an interesting thing to watch as it becomes harder and harder to crush for oil if stocks are dwindling.
So, to just kind of add to that, part of the reason, kind of going into the reason, is that the Argentine hangover from losing 60% of their crop, massive amount. We've had, at the same time that we're building crush capacity for bio-renewable diesel, there's a major Argentine drought last year, right? So we're running wide open. We're able to get rid of the meal, via exports. We're able to get rid of the oil via, with domestic, needs for renewable diesel. But that being said, if Argentina starts looking good, I think we started seeing the beginning phases of that potentially, where meal's an expiring option, in my opinion. You're going to have some inverses, some strong meal prices until you get, crush going again in Argentina. But once that happens and that export demand goes away, I think you could see a quick shift in that oil share, Dustin, to your point. Back at some point, we're going to 50% and maybe staying there. As long as these, projects continue and as long as renewable diesel's, in favor of the politicians and policy. I think that's just, fundamentally makes too much sense for that to have to happen at some point, unless Argentina just stops crushing and we can get a meal export program in place.
That's really good. Hey, Rye, on a real quick snippet, what are you calling this morning in cattle and hogs?
Well, we actually bounced yesterday. I think we're going to get a little bit more confidence from anybody that's just been waiting to see, a little bit increase in open interest and some green on the screen. It's just you've taken so much wind out of the sail. I think we're going to get a little bit more on the speculative buy side now that we're kind of past into this more seasonal environment where typically you get a bounce. Cash trade has not been great, but we've also got this big discount on the board still. So there could be a little bit more room to the upside today. I don't want to get too overconfident that this is some kind of a low or anything like that. I mean, there's still a lot more to deal with as we go forward in the next, all the way through next quarter. But right now I've been seeing some 171 trade in the South, very light volume. That have been about $3 to $4 lower from last week, and 271 in the North. I think the market's going to be paying really close attention to the weights. Dressed weights last week were around 839 pounds. Now this is just up sharply from the 5-year average, up sharply from last year. So and I've talked to a couple growers in the South. Weather has been fantastic. It was like 60 degrees in some areas in Kansas, 50 to 60. So it seems like the weather, we haven't had any weather adversity at all this year. There's no weather premium into the market. There's really not much to really chew on as far as the weather goes. So we've seen these weights just explode, and the market reacts really negatively to these big high weights for sure. It always has. So I would say that's a big number to keep in mind this week as we go. Just should get a better picture of it tomorrow when that data is released. But yeah, like I said, maybe a little bit more confident from the spec side. I don't know if we're out of the woods yet with just the overall direction, but one day up after making a contract low is going to get people thinking that there's a little bit more stability. I just don't want to get too excited too soon.
Sure. Well, thanks, buddy. Appreciate that. We just came into the open here. March corn's up 2 1/4 at 492 3/4. March soybeans are down a couple at 1324 1/2. And Chicago wheat's catching a bid here, up 15 1/2 in March contract at 646 3/4. As always, streaming live on YouTube, X, and Facebook Live. Same time every day, 8:15 Central Time. And we appreciate everybody tuning in this morning and look forward to talking to you again tomorrow.
Thanks, Dan.
Thanks, Dan.
Yeah, Dan.